a fully cashless future might be closer than you think. Well, you might think that credit cards and online payments have already disrupted the cash usage to some extent, but what if I tell you that cash would disappear almost completely? Yes, you heard it right, because behind the curtains, governments are now developing digital currency that is ready to completely replace cash. And no, I'm not talking about cryptocurrencies. I'm talking about CBDC, which stands for Central Bank Digital Currencies. These aren't just digital dollars. They come with controls that can limit how, when, and even if you spend your own money. In some cases, unspent money could even expire and vanish. Sounds confusing? Don't worry. In this video, I'll break down what is CBDC, how they work, why they pose a threat to your financial freedom, and what every earner, spender, and saver needs to know right now before this system takes over. So, stick around and subscribe if you value your financial freedom. Section 1. What is CBDC? Alright, let me break down CBDC, Central Bank Digital Currencies, in the simplest terms. So basically, CBDC is digital money combined with total government control, disguised as modern convenience. This digital currency is way too different from cryptocurrency and others. Right now, your bank account money is just numbers in a computer that represent real dollars. But CBDC is the money itself, issued directly by the government. It is not like the government printing paper money and letting banks handle it. So, unlike your current bank account, CBDC is programmable money. That means they eliminate the middleman. For example, if the government wants to control your money, they have to go through banks, and banks can push back. But with CBDC, the government is the bank. No intermediaries, no protection, no appeals process, just direct government control over every financial decision you make. Imagine this. Alex gets paid $3,000 in his CBDC account. Everything seems normal. Bills get paid, groceries bought, life goes on. But one morning, Alex checks his balance and sees a warning. $500 will expire in 15 days if not spent. He had planned to save that money for his vacation, but now he's forced to spend it or lose it. Later that month, he tries to book a flight abroad, but the payment is declined. A message pops up. International travel restrictions are in place. He can't appeal. There's no customer service, no bank manager, just the system automatically deciding what he can and can't do with his own money. His financial freedom seems gone. Don't you think it is insane? And if you feel that it is unreal and hypothetical, then let me tell you something that happened in Nigeria last month. The government deleted $2.3 billion worth of its old currency overnight and forced everyone to use its new digital money. People couldn't buy food, couldn't pay rent, couldn't even get medical care because their money literally stopped working. Adding to your surprise, the US government has been studying Nigeria's successful transition as a model. And not only the US right now, 114 countries representing 95% of global GDP are actively developing central bank digital currencies. Imagine your government deciding what's essential for your life because they have a purpose behind it. Section 2. The purpose behind CBDC. Beyond just making payments easier, CBDC could give governments a powerful new way to see and even control how you spend your money. It's about a potential shift in who holds the power over your financial freedom. And that's where the danger of the CBDC lies. The loss of financial privacy. See, when you hand someone a $20 bill offline, that money transfer is completely private. Nobody knows where that money came from, where it's going, or what it's being used for. That privacy is about to disappear forever. With digital currencies, every single transaction creates a permanent, traceable record. The government could know that you bought coffee at 8:47 a.m., gas at 12:23 p.m., and groceries at 6:15 p.m. They'd know you tip generously, buy generic brands, and occasionally splurge on expensive restaurants. Every financial decision you make becomes data in a government database. You'd say that the current credit card companies already collect this data, but the difference is choice. Where you can choose not to use credit cards, you can pay cash. You think your privacy is protected because you use cash sometimes. Well, cash usage has already plummeted by 65% since 2019, and major banks are quietly removing ATMs from neighborhoods across America. They're choking off cash access while building the digital prison. But if cash disappears and CBDC become the only option, you lose that choice completely. So the implications are staggering. Studies show that people spend differently when they know they're being watched. Researchers call this the panopticon effect. When every purchase is monitored, people self-censor their spending. They avoid certain stores, certain products, and certain donations. Freedom isn't just about what you can do. It's about being able to do it without someone looking over your shoulder. In Canada, during the trucker protests in 2022, the government froze the bank accounts of people who donated to the protesters. Now imagine if all money were digital and controlled by the government. They wouldn't need to ask banks to freeze accounts. They could just turn off your money with the click of a button. That's how digital currency can go wild. Section 3. The potential threat of CBDC. One of the biggest concerns with central bank digital currencies is its programmability. This means your digital money could come with built-in rules, allowing governments to potentially dictate how, when, or even if you can spend your funds. This opens up possibilities that sound like they're straight out of a story, but they're being seriously discussed by policymakers today. According to Reuters, Japan used to be all about physical money, but in 2024, nearly 43% of payments were cashless. That's a huge jump from just 13% back in 2010. It shows that CBDC could become critical infrastructure in Japan shortly. Now, here comes the potential threat. See, the money expiring is a new thing for many. This scenario was seen only during COVID-19, where several countries issued stimulus payments that had to be spent within a certain time frame. The idea was to boost economic activity by preventing people from saving money. But imagine if all your salary had an expiration date, and you had two options to spend it or lose it. Not only the expiry, but the geographic restrictions are another thing. Your money could be programmed to only work in certain areas. Maybe rural communities get money that can only be spent locally to support small businesses, or maybe certain types of income can only be spent on approved necessities. So, the government could control where your money goes. Even more concerning is the possibility of negative interest rates on digital currency. Right now, if the Federal Reserve wants to stimulate spending, it lowers interest rates on loans. But with digital currency, they could make your money shrink over time if you don't spend it. For example, your $1,000 could automatically become $990 after a month, then $980 the next month. It's like inflation, but intentional and immediate. Some economists have suggested using programmable money to automatically collect taxes. Instead of filing tax returns, your digital currency could calculate and deduct taxes on every transaction in real time. This seems quite convenient, but it also means the government gets its cut before you even see your full income. Things would take a massive global power shift. Section 4. The global power shift with digital currency. The global shift to fully digital money isn't just about convenience or control. It fundamentally changes how the economy works. And these changes could affect your wealth in ways you haven't considered. First, let's talk about monetary policy. Right now, when the Federal Reserve wants to stimulate the economy, it lowers interest rates and hopes people will borrow and spend more. But with digital currency, they could directly deposit money into every citizen's account with specific spending requirements. They could also make money disappear from accounts to fight inflation. It's like an economic control on steroids. And just when you think bank runs are impossible, so does your ability to protect your money from bank failures. Right now, if you don't trust your bank, you can withdraw cash and stuff it under your mattress. But with only digital currency, your money exists only in the system. If the system fails, your money vanishes with it. The underground economy would be decimated. Right now, economists estimate that cash-based transactions make up about 11% of the US economy. That includes everything from babysitters and house cleaners to farmers markets and garage sales. Many of these transactions would become either impossible or subject to full government oversight and taxation if digital currency were announced. Even the interest rates could go deeply negative in ways that are impossible today. With cash, there's a limit to how negative interest rates can go because people can always withdraw physical money. But with only digital currency, central banks could impose significant negative rates, essentially forcing people to spend or invest rather than save. Section 5. What can you do about it? So, what can you do in a world where cash is disappearing and digital control is increasing? Well, remember one thing. You're not powerless, but you need to act while you still have options. First, diversify your money storage. Don't keep everything in traditional bank accounts that could easily be converted to government-controlled digital currency. Consider precious metals, cryptocurrency, foreign bank accounts, or other assets that exist outside the traditional banking system. Learn about cryptocurrency, but be smart about it. True cryptocurrencies like Bitcoin operate independently of government control, but be aware that many governments are planning to heavily regulate or ban independent cryptocurrencies once they launch their own digital currencies. Support businesses that still accept cash. Use cash when you can. The use it or lose it principle applies here. Payment methods that people don't use disappear from the market. Stay informed about CBDC developments in your country. Most people have no idea these systems are being developed, let alone what they mean for financial freedom. Knowledge is power, and the more people understand what's coming, the more likely we are to demand protections for financial privacy and freedom. Build alternative systems now while you still can. Learn barter skills, develop local trading networks, and invest in assets that hold value outside the digital system. Think of it as insurance for your financial freedom before the end of cash hits. Section 6. The end of cash is closer than you think. It's true. That idea of a truly cashless society? Well, it's actually way closer than most people think. We've already got countries like the Bahamas, Nigeria, and Jamaica that have jumped in and fully launched their own digital currencies. And it's not just the smaller nations. Big players like China, India, and even the whole Euro area are deep into testing their own digital money right now. So, the move towards digital cash issued by governments is definitely happening, and it's happening fast. The interesting part is that the end of cash isn't necessarily evil, but it's permanent. Once physical money disappears, there's no going back. And once digital currencies become programmable and controllable, that control will only increase over time. Even the European Central Bank is also planning its phase 2 of the digital euro project. So basically, they're planning to control what you buy to manipulate the economy. If they want people to spend more, they'll make money expire. If they want people to save, they'll reward certain types of purchases. So, honestly, we're at a crossroads. The decisions made in the next few years about digital currency design will affect generations. Most people are sleepwalking into this transformation without understanding what they're giving up. The convenience of digital payments is real, but so are the risks to freedom and privacy. This isn't about being anti-technology or anti-progress. It's about making sure that as we embrace new technology, we don't accidentally surrender the financial freedoms that previous generations fought to establish. The end of cash might be inevitable, but the kind of digital money system that replaces it isn't. That choice is still ours to make, but only if we make it consciously, with full understanding of what's at stake. Because at the end of the day, money isn't just about buying stuff. It's about freedom, privacy. If this video helped you see what's coming, share it with someone else who needs to hear it. The more people know, the harder it is for bad ideas to sneak by without a fight. Thanks for watching, and catch you in the next one.